In the next section, we'll discuss trend trading. So trading during a downtrend can be much more difficult than trading in an uptrend. Uptrends can be generally much more forgiving, and traders may be able to get away with taking on more risk as opposed to a downtrend, which can force traders to take on less risk. They have to be much tighter with their stop losses and much more accurate with their entries and exits. Now, in an uptrend, stop losses can be set lower as the market is more likely to move to the upside and not produce lower lows, therefore triggering the stop. And in a downtrend, traders may opt to set much tighter stop losses to reduce trading risk. Traders may think they have identified a market bottom and enter a trade during a downtrend, but may find price action continuing to move downwards, as that is the likely occurrence if not timed or placed properly. It's generally advised to trade with the trend. This means longing in an uptrend and shorting in a downtrend. If you choose to not trade with the trend, you're essentially fighting against the current. Think of fishes. When fishes are in a river, they swim with the current. They're not looking to swim against the current of the river or the stream or whatever it is, because that requires much more work and much more effort. So to save yourself headaches and save yourself the trouble of trading against the trend, trade with the trend. Make your life easier. Make trading easier. In addition to analyzing market structure, it is important to know the history of the asset trading, including previous cycles, trends, patterns, price history. Where is price coming from? This is really one of the big ones. We want to have an understanding of where is price coming from, where could it go, what happened to the last time price was in this area, what are some of the factors I want to look out for. While none of these factors will repeat 100% exactly as it occurred in the past, using these to inform your trading decisions can be beneficial, as other traders and automated trading programs, such as bots, may use this data to shape market movement. A lot of the market is based on what has happened before, especially in regards to automated trading. If you're not aware of it, take a look at our automated trading section. A vast majority of trading, especially in crypto and in the traditional equity markets, are dominated by these automated trading programs, about 70% according to recent studies. And a lot of that information that these bots are based and performing off of are based on previous price action. Here's an example of a support level, of a key pivot point throughout 2021 and even into 2022 as well. This is the 42K level, right? We saw multiple instances of Bitcoin either failing to surpass it, and where it acted as resistance, as in early 2021, a very strong breakthrough with a notable volume increase above it, price coming back down to retest, and it's holding above this zone. Price comes back down to here, it bleeds into it a bit into March, but ultimately holds. Generally, we could make the argument where it bounced down to it here, but that really depends on what you're looking for. We do see, particularly here, this area was seen as a breakout to the downside, or a breakdown to the downside, and with a general increase in volume, indicating that there was a significant interest in this particular range. And we even see this with a particularly strong volume candle on this large wick. This is an indication of capitulation, where the market finally was pushed down to an extreme low after especially breaking through such a strong level. So this did require a particularly strong amount of momentum to break through such a significant level, where it should have acted as support, and it was broken down. Price came back to it here. It was rejected. It came back to it even higher here. ultimately was rejected, and this is the second rejection. As a result, price would trickle down. We see it come back to here, and it would continue to act as significant support. And we do see even throughout 2021, there were several instances of it either hanging in this range or meeting it as support or as resistance from the underside. So that was our example from the most recent bull run from 2024, from Q4 2020 to Q4 2021. The 42K to 44K price range, it has proven to be a crucial level of support and resistance this year. In 2022, this has continued to hold true. Particularly, we have seen in January, February, and March, where price has rebounded from as low as 33K to a high of about 46K, where the midpoint of about 42K, 41K has been considered a strong pivot point, where if price is breaching past it from the underside, it has shown to continue to go upwards to that 46K range. Now, one can consider 11 instances of Bitcoin price action, either testing the level from below, where the range acts as resistance. It tests the level from above it, where the range acts as support. And it tests the level from within, where the range is a period of consolidation. Now, with this level and with this information, we can start to see the price action of an asset through the lens of a trader, where you can start to see ranges that Bitcoin trades in, and people are taking advantage of these ranges. People are looking for these ranges. It's not just one or two people. The more people that continue to look through Bitcoin through this lens and through this analysis lens, the more likely they are going to hold. Now, with that said, entering long positions too high in a range can be risky, because if we have this understanding, if we say Bitcoin is trading in this range, it's below 42K, you enter in the position at 40K or 41K, you're way too close to the resistance. Price will possibly keep going, but it's going to reach the top of that range or get near that resistance level, and most likely it's going to be denied. And that will cause price to fall, and the trade will turn against you. Once again, don't buy after price pumps. Don't buy into resistance. Being able to identify ranges can also give a trader an idea of not only when to enter a market, but also when to exit a market or a trade. If Bitcoin is trading between 42 and 44K, it may be a good idea to start taking profits, if not close the position altogether, as price nears that 44K level, as it has shown to be a significant level of resistance unless there are indications that price will break out of the range, right? Once again, support and resistance levels are typically expected to hold, especially on these larger time frames such as the daily, the weekly. There's a greater expectation for them to hold unless proven otherwise. So it's better to have that expectation of, well, 44K is our resistance, it's probably going to hold. Let me take profits beforehand. And even if you did miss out on a breakout, maybe it breaks out to 46K, 47K, more often than not, that level will hold. And let's say it breaks out that one time out of 5 times, the other 4 times it's going to hold, most likely. So it's better to be safe than sorry. Once again, trading is an act of capital preservation. It's about not losing money. It's about staying in the game for as long as possible. It's a marathon, not a sprint. Don't buy those breakouts. Buy at support, sell at resistance, and respect those trading ranges. Another thing we want to consider are macroeconomic factors. So macroeconomics involve systems and events that operate on a large scale. This could be inflation, federal interest rates, shifts in political leadership, and more, maybe policy shifts. As a crypto trader, it's wise to keep these factors in mind when studying the greater market and predicting what could happen next, right? We always want to be as informed as possible. That way we're not caught off guard. Now, announcements regarding macroeconomic factors can have dramatic effects on the market, where government officials can completely change investor sentiment based on their words alone. One example of these possible macroeconomic factors is the relationship between the Federal Reserve and Bitcoin. So many in the financial space fear when government discusses changing monetary policy, such as its effects that it could have regarding the valuation of their investments. It could also change market sentiment, causing investors to panic sell even if the statement or policy doesn't actually change anything, even related to them. One example of this is when Federal Reserve Chair Jerome Powell speaks, where Bitcoin will often drop as investors fear what the official will say. And this is something that has happened numerous times throughout 2021 and into 2022. Here's a list of the FOMC, the Federal Meeting Committee, where they have certain meetings, the Federal Reserve, and they release public statements on the results of their meetings and what their certain trajectories are in terms of financial policy and overall growth of the economy in the U.S. And if we track particularly these dates, this is all available for public source. If you go to the Federal Reserve website, you'll see their schedule of expected meetings and expected statements and whatnot, interviews. And if we track each of these dates, we could see a potential correlation with Bitcoin's price fluctuations. For example, on this particular time frame, this is in mid-September, here we see a market sell-off 3 days before Powell is scheduled to speak on 9/22. So we see 9/22. This is the 20th, 21st, 22nd. This is the actual 22nd here. 3 days beforehand, we saw a sell-off. There was expectation that Powell was going to talk about increasing the interest rates and just general market worries, particularly in 2020, in September 2021. With the revealing of the Evergrande situation and debt crisis in China, and how that could potentially spill over into other international markets and have a greater financial meltdown than the one observed in 2008. So this is kind of what macroeconomics and having an understanding of what's going on in the world of finance and economics and its impact could have on your investments. We saw that this particular sharp red day on Bitcoin, this was attributed to the release of the news of Evergrande and how it was going to default on their debt obligations, and it was hundreds of millions, if not hundreds of billions of dollars worth of debt, and how this could potentially affect the global economy. And there was a great fear during this time period that there was going to be some sort of looming debt crisis, which still has not yet been quite solved as of March 2022, but this is something that we'll have to see how it will resolve over time. But having knowledge of what's going on in the world and what's going on in the news can inform your trades and inform what's going on in the market. We saw that the federal chair was supposed to speak on the 22nd. There was a large dump on Bitcoin for the next 3 days, from about 48,000 to a low of 39,000. So that's a significant drop. Now, Powell came out and spoke and announced, well, they have some sort of interest in lowering the interest rates, but there is nothing immediate. And as a result, because they did not have anything yet quite set in stone and planned for this particular date, Bitcoin attempted a reversal to the upside, which is not a surprise because, once again, the market loves to overreact to politicians and regulators and their statements, even if they're not necessarily immediate causation for a reaction. Here's another example. This was on June, focusing on mid-June. Here we see Bitcoin's price see losses on June 15th and 16th, and throughout the following 5 days, we saw on the 15th and 16th was the day of another Federal Reserve Open Committee meeting. And as a result, there was some talks about lowering increasing the interest rates, the federal interest rates. As a result, we saw a further deterioration